earnings are always tough when the market has built up a lot of optimism around the business. So why do you think they're a little bit concerned about the forward-looking guidance when it comes to revenue, when it comes to operating profit?
So look, I think this was, and I said this in the earnings call, a transformational and extraordinary earnings for us. You know, the company really hit on all cylinders. We beat on revenue. You know, we reaffirmed our annual revenue targets from a nominal perspective. We reaffirmed our 2026 ARR operating margin targets. Really a great quarter for us by the numbers, but also, you know, extending our product. You know, we can't keep up with demand from existing customers, which are, you know, historically have been AI labs and AI native and cloud.
And now they're expanding?
Yeah, and we're just being overwhelmed by new verticals that are coming in and integrating AI at scale into their workflows, right? And so, you know, you heard me talk a little bit about some of the trading and finance companies like Jane Street and Hudson River Trading, you know, that's adding to, you know, JP Morgan and Morgan Stanley, who are already clients. You know, you heard me talk a little bit about some of the physical AI into the robotics space, you know, where you know, great new clients coming onto our infrastructure. It's really exciting. You know, stock's going to bounce around. You know, we understand that, but you know, one of the best things about being a founder and a CEO, and one of the best things about, and one of the hardest things about being a founder and CEO is, you know, I try to keep my eye on the parts of the business that are succeeding and growing and expanding, and you know, we're winning the day, right? We drove down our cost of capital. We expanded our backlog by $40 billion. We did all the things that we needed to do. So I'm thrilled with the quarter. I think it was fantastic. Yeah. You know, seemingly there's a little bit of trepidation around next quarter's revenue.
How do you get next quarter? And indeed, the second half, people are optimistic. You're saying, I'm optimistic that profitability will ramp up in the second half. How does that happen?
Oh, so, you know, I mean, look, it's almost mathematical at some point, right? Like where, you know, you're building infrastructure. That infrastructure takes time to bring online. We are going through a massive build out across the company right now. It's why the operating margins have compressed, is because we're going through this enormous scaling exercise. As you push through that, all of that infrastructure comes onto billing. And once it comes onto billing, you are going to see a sequential expansion of the operating margins until we go from, you know, 1% in Q1 all the way up through low double digits by Q4. And, you know, that's sort of baked in because of the infrastructure coming online, the software capacity to deliver that infrastructure. You know, we're highly confident we're going to hit those numbers.
There was anxiety about another company, a client, not hitting internal numbers. And I'm talking about OpenAI. And look, Sarah Fry has come on and spoken to colleagues here at Bloomberg News and pushed back against that, saying they're seeing a wall of demand. But how confident are you that your clients are seeing that demand and are good for the money for the build-out?
Yeah, so one of the things I talked about yesterday during our earnings call is that the demand for our paper in the debt markets has been nothing shy of astounding. You know, we did one of our delayed draw facilities closed 2 days ago. The clients in it were Cohere and OpenAI exclusively. And the two things happened. One, it was 5x oversubscribed, which is enormous. It also closed 50 basis points below the marketed range. And that is a clear indication of enormous buying interest for financing the paper. With regards to paying, look, you know, OpenAI is an extraordinary company, right? 1 in 10 people on the planet use their product every year. But, you know, and we think that they're in a wonderful position. But we've also built an incredibly diversified portfolio of companies that use our infrastructure. This quarter, we announced Anthropic. We announced a massive deal, $21 billion with Meta. We announced, you know, a $6 billion deal with Jane Street. You know, like the number of clients that are using our infrastructure are expanding. The diversification is expanding. OpenAI is an important client, but one of many.
Let's talk about an important partner and in your supply chain, and that's Nvidia. Look, how confident you are with the strength of your relationship there? Nvidia's made deals with you, invested in you, but they're also doing that with, shall I say, even competitors in the space. Is that ever an anxiety?
No. I take that as an incredible affirmation of the fact that the world needs more of this infrastructure, and the demand for the infrastructure and the product that we deliver is, overwhelming. And, at the end of the day, NVIDIA's got to do what it's got to do for its business. I really focus on my clients, and my clients are coming back to us, and they are saying again and again, you deliver the best product. The way that your software stack enables our engineers to use it most efficiently, that most cost effectively, and most successfully, and therefore we want to buy more. And so the problem that I've got is, how do I bring on enough infrastructure to sate and to deliver the infrastructure that my clients are clamoring for?
Dig into the problems, because there have been delays at times with certain of them coming online, and that's to do with the partnership. What is the biggest chokehold for you at the moment?
So, CoreWeave is becoming a massive player in the space, and we are currently approaching 50 data centers that we are delivering infrastructure from. There is no single data center provider that represents more than 17% of our infrastructure. We have a massive effort internal to the company to go through self-builds so that we have greater operational control over the delivery of data center capacity. We're doing all the right things by diversifying to ensure that no single data center can materially impact the trajectory of the company. That is further reinforced by just the size and scale of the installed capacity, right? So, if you have a gigawatt worth of capacity and a data hall represents, 50 megawatts, and you're bringing 50 megawatt, the impact of a week delay on 50 megawatts in a gigawatt environment is very different than earlier on when you're bringing on 50 megawatts and you only have 50 megawatts online. A week delay rattles your entire ability to project where you're going. And we no longer have that problem. We have achieved escape velocity, both in terms of our data center capacity, as well as our revenue, as well as our ability to provide guidance into the back half of this year. We're super excited about that.